Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick here alongside Gina Martin-Adams. We're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar. We welcome our audiences across Bloomberg Television, radio, as well as for those folks streaming on YouTube to parse the crucial moments of the day. And Carol, I feel like the most crucial moment of today is really what everyone is looking ahead to, which is really Tuesday's big CPI report.
Happy Valentine's Day, everybody. Or will it be, right? Absolutely. The Fed has said that they're data dependent. So all of these data points, especially reads on inflation, are going to be key in kind of figuring out what the Fed ultimately does next, Gina.
Yeah, and certainly inflation is top of mind for all investors, but especially for the equity market. When we look at the equity market valuation ratio, it does imply that the equity market is pricing for inflation to ease all the way back to that sweet spot of 0 to 2%, which means the Fed has achieved the success that they've so desperately desired over the course of the last year. Can they get there? Will inflation get there fast enough to satisfy the equity market's demands? I think is a huge question mark going into the spring and summer months of this year.
And then it gets back to the idea, though, is, well, if the Fed's not done, and more importantly, if the Fed does need to continue to raise rates, you know, the idea that they could go above 5% and hold there, the idea that you have bets, Carol, out in the market right now for 6%, and then Liz Capel-McCormick actually interviewed someone earlier today who's saying that 8% actually isn't that far off the table. Now, that is, of course, a moonshot kind of speculative bet here. But, you know, this isn't coming from a slouch here. I mean, you know, she's talking to folks who really have a lot of skin in the game, and they seem to think that at least where we are right now, which is sub 5% in terms of expectations, is still too low.
And then what does that mean for valuations, like a reset here?
Absolutely. And speaking of valuations, a lot of earnings coming after the bell today, including Lyft and PayPal. Before we get to them, let's walk you through the numbers. The Dow Jones Industrial Average closing lower by about 0.7%. The S&P 500 down by about 0.9% here on the day, while the Nasdaq is going to finish lower by about 1% even here. Two of the big underperformers on the day on an index basis belong to the Dow Transports, which are down 2% on the day, and the Russell 2000, which is going to close out at right around 1.4% lower.
Yeah, what's interesting, too, and Gina talked about it when she went through the sectors before, it's not like everybody's running for cover at this point. Having said that, we still have about 385 names in the S&P 500 that actually lost some ground today, Gina. 115 higher, 3 unchanged.
Yeah, absolutely. And have a look at that GRR, talking about the lack of defensive trade. It's been really quite stunning. Autos are at the top. That is certainly not traditionally considered to be a defensive sector. So you've got Tesla rallying along with companies in the food and beverage sector, as well as the Walmarts of the world. That's a little bit of a mixed message, certainly from the equity market. On the other end of the spectrum, though, it's been consistent all day. Media and entertainment is the laggard on the day. Certainly that is a reflection of the strength to some degree that we saw in this segment last week, but also really strong weakness coming out of Alphabet, Meta, and the broader space, even with the positive Disney news.
All right, so let's get to some of the specific gainers in today's session. I did have Disney up there, which unfortunately was higher, up about more than 5% earlier in the session. Finishing the day, though, down about 1.25%. You know the news. We broke it down. Big rally after the market closed yesterday, and maybe, I don't know, a little bit of an adjustment. We know big cost savings. We know Nelson Peltz saying, I'm done. The proxy fight is over. But nonetheless, there are some big swings on Disney today, so we'll keep an eye on that. MGM Resorts, I talked about it. The casino names were on fire today. MGM top in the S&P 500. Earnings last night posted strong results driven by Vegas and Macau. So as I said, that name finishing up about 6.5%. Alphabet, watching this one, among the biggest decliners in the NASDAQ 100, slumping for a second day. You know the story. It's down roughly 12% over the past 2 days. This race for AI, generative, AI specifically, you know, Bard, it's kind of competition to ChatGPT. Not coming out. We just had on Sylvia Jablonski earlier on. She's over at Defiance ETF. She said she'd be buying on the dips because she thinks Google, Alphabet will certainly be a big player here. What?
Yeah, well, I was going back to Alphabet. You kind of moved on, but I just found this story fascinating. The fact that people react this way? Because remember, it's not like the stock got bid up because of
Exactly.
ChatGPT. So I'm curious as to why it's selling off based on ChatGPT.
Kind of a
But
slow
you
your
remember, Alphabet
roll
has some
here.
really negative sentiment, though, right now. Everybody's very disappointed that this company has not been able to find that next big growth driver, that next big investment. And so anytime you get reminded with ChatGPT, as the latest example, that they haven't been able to find that investment, you do see the stock consistently sell off on that type of news. It is supposed to be a growth company. They're supposed to be a tech company, even though they're in largely advertising revenue drives still a portion of their earnings. I think that sentiment aspect really drags on them.
Yeah, and just before we move on here, just real quickly, I do think it's notable that a lot of the big decliners today were a lot of those speculative names that we have been talking about over the last few weeks. Carvana down 15% on the day, Affirm down 17% here, Global Tech down 33% here, Coinbase down about 14%. Want to get to yields, though, real quickly here before we get to the earnings here, because we did see some interesting moves here. We did see at one point the 2-year yield back above 4.5%. It's going to, right now it's at 4.48 here, but the damage is done. 3.66 on the 10-year yield, and of course deeper inversion, Carol, on that 210s curve with the negative 82 here, a steepest inversion we've seen going back to the 80s.
All right, we talk about resets. We're getting one on Expedia, which is up about 34% so far here in 2023, down more than 8% here in the aftermarket. Let's get to it. Fourth quarter revenue, $2.62 billion. That's a little bit light. The street was forecasting about $2.71 billion. Fourth quarter adjusted EPS, this too is a big miss, $1.26. The street was looking for $1.77. A key metric here, we're talking about gross bookings, $20.51 billion. And Romaine, again, another miss. The street was looking for $21.06 billion, down 8.5%. You know, we've seen the travel sector on fire, so this is interesting.
Yeah, and we've talked a lot about this, Carol. I mean, the idea that this was so the whole sector was so resilient. And there was a big question of, was this just that revenge travel? We're going to get it all out of our system, and then these stocks would sort of revert, or whether this was sustainable. I don't know how much we can read into one earnings report here.
I think we have to be careful.
Yes, you're absolutely right. And we should point out, we've heard from the airlines, they were still pretty bullish about their prospects going forward, and a lot of the hotel stocks. So maybe this is something more specific to Expedia. We'll have to dive a little bit deeper into it. But I do think the initial knee-jerk reaction here, Gina, is kind of interesting. Down 8.5% off of, it's a miss, but it's not a massive miss.
Yeah, but it is a double miss in an environment where you're getting, you know, on misses, also companies announcing massive cost change, structure changes, restructurings. So, you know, what are they going to get, kind of meat are they going to give us as to why this miss happened and how are they adjusting?
I'm just going to jump in here, Gina. Speaking of misses, Lyft shares down 14% in after hours trading right now. Let's start off with the 4Q numbers here. Revenue per active rider coming in at about $57.72. That's slightly higher than what the street was looking for, but their overall revenue coming in at $1.18 billion. That's pretty much on the nose of what the street was looking for. They're still posting losses, even on an adjusted basis, an adjusted net loss of $271 million for the quarter. Here's your guidance going forward, and this might be a big part of the reason why the shares are moving lower. 1Q revenue, $975 million. That's the guidance they're giving. The street was looking for $1.09 billion. We'll just round that up to about $1.1 billion. As far as adjusted EBITDA for the first quarter, the company guiding to, and this is a pretty big guidance here, $5 million to $15 million. So that's a pretty wide guidance there here. Not quite sure exactly if how that compares to what the street was looking for here. But based on the reaction, Carol, 18% down in after hours trading, I don't think this is what investors were looking for.
Uber's also down about 1.5%. Remember, Uber came out with a strong report, and the anticipation was that should Lyft, you know, do the same. And at this point, we're seeing not that. It's down about 20%. I'm looking at the press release here from Lyft specifically, and they're talking about to take advantage of opportunities, we must ensure competitive service levels, reinforcing our competitive position, servicing more demand, and reducing our fixed and variable costs will put us in the best position to deliver strong shareholder returns. So I feel like everyone, Gina, at this point, focused on margins and really cost reductions.
They did, but is there many meat behind that? What kind of fixed and variable costs are you going to focus on? Is there a layoff announcement? Is there a restructuring announcement? I mean, I think that the market's expectations on the degree of movement from these companies has only been amplified by the companies that have reported so far. There is a huge expectation for massive change to be announced with earnings reports that miss.
A couple other numbers are coming out of the report here. 20.4 million active riders in the first quarter. We should point out now that is in line with what the street was looking for. Though we should point out that's still about 2 million customers below the base of about 22.9 million active riders that Lyft had, at the end of 2019. So again, you know, trying to compare this to where we were pre-pandemic, basically what we're looking at is a ride share, at least based on the total amount of active riders, not quite back to those pre-pandemic levels.
Yeah, and I think there's probably some frustration. The cross theme here is that activity levels are not satisfying expectations and are still decelerating to some degree. Yeah. Can we actually get back to those pre-pandemic levels of activity before we fall into some sort of recession distress? It's a huge question.
And Carol, this was a stock that had rallied like 50% to start the year.
Exactly. It was up. It's still 50% of the flat the float is shorted. I just want to mention Jackie DeVolis just out with the story and is talking specifically about rising insurance costs and not passing them on to customers. So the company has been absorbing them. So a little bit more color, if you will, in terms of what has impacted the quarter. But man, that stock is just falling off a cliff here in the after hours. Still down. I'm pulling it up. Down about 20% here. So we'll continue to watch it into tomorrow's trade. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. Beyond the Bell, we call it. We will see you again, same time, same place tomorrow.